Happy Dragon Year to everyone. May the Dragon Year bring you good health and prosperity. And last week, on Friday, our Deputy Prime Minister and Finance Minister deliver what I call an ampao budget. So they have given out a lot of goodies to both individual and businesses. So today, what I want to focus is on SME, because if you are aware, in the budget announcement, there are several tax incentives for many industries. Some are actually very specialized incentive, like incentive for the maritime sector, aerospace, finance industry. Those I will not cover today because it's a very specialized topic. I would just want to focus on the more general business type of tax incentive, or those non-tax initiatives by the government, such as the Skill Future, Enterprise Credit, and so on, which would benefit most of us. But as in any budget scheme or initiative they have announced last Friday, there are some also will have impact us in terms of cost. So though there's a lot of giveaway, a lot of money given, tax rebates given, they are also tightening on some manpower policy, like increasing the local employee kind of salary. So that I will cover later. Okay, so I will have the Q&A session after my presentation, so that I can deliver this seminar without interruption, and then we will have the Q&A at the end of the session. Okay, so the budget 2024 cover various areas, like I mentioned earlier. So I'm not going to tackle all of them. Some are very individual kind of incentive given, like the CDZ voucher, GST voucher, and all that. Those are very individual kind of initiatives. I will focus on SME only. So I will touch on the enterprise support package. Right, we also touch on some workforce policy. For example, like I mentioned earlier, on the local qualifying salary, on adjustment for CPF contribution for senior workers, workfare incentive, and also the progressive wage credits. I hope you still remember the progressive wage credit, the grants given by the government on increment given to staff. I will revisit it because there are some minor adjustment to the subsidy given by the government. Next, I will touch on the corporate income tax, on the tax rebates and so on. And personal income tax, there are also some rebates given, and also some relief that are being withdrawn. So that may impact some of us. Last but not least, I will cover the property tax. Even though property tax mainly for residential property and not for not for commercial industry property tax, but I thought just to share some of the adjustment in the annual value bands, so that you're aware that hopefully next year you'll pay lesser property tax as compared to what you are paying now this year. Okay, first I will touch on the enterprise support package. These are not really tax incentive, but rather some government scheme to support industry in terms of granting certain loan, or giving some grants to support the automation and digitization of businesses. Okay, first up is this enhancement to the enterprise financing scheme. Actually, this is not a new thing. It has been around in the last two budgets. Every budget for the last 2-3 years, they have adjusted some of these existing scheme. So for budget 2024, they have fine-tuned further, all right, in terms of some of the financing schemes that the government are giving out. So for example, in the SME working capital loan, they have actually increased the amount from 300,000 to 500,000. So there is a significant increase in terms of the working capital loan that you can apply through the banks. Is 200,000 more, right, to help businesses deal with the increasing costs, and also to do automation and so on, to help out businesses in towards this automation, which there are several other initiatives or schemes given, which I will share with you later on. The trade loan of 10 million have not increased, but rather they have extended it for another year. Right? It's supposed to expire this year, but they're going to extend it to next year, March 2025. Right? So this again is a very helpful extension, allow businesses to draw on a low interest trade loan from the banks. Right. Similarly, for the domestic construction project loan, there's also an extension. So you're constructing buildings and all that, you can actually apply this loan. And now they are given up to 31st March 2025. Also, these schemes are being fine-tuned this year to extend mostly to 31st March. Okay, this one, basically more of us would have benefit. Right? So for those who are planning to do some automation in terms of digitization, this is again a very, very good incentive. There will be a one-off credit of up to 10,000. That means the government will support you with at least up to a maximum of 10,000 to cover, can be up to 90%. So some may be a lower amount, can be 70 or 80%, but in some initiative, they can cover up to 90. Right? So detail will come up later from my understand. So I can't share much with you. But again, this is not a new scheme given out. It has been around for the last 3 years or so since the COVID-19 pandemic. So this Skill Future Enterprise Credit has been around for a while. What happened is that now again, it has been extended for another year, right? So again, this is supposed to expire this coming June. So now have been expanded to another year. So don't wait. We are not sure whether this will go on forever. Like I said, this actually came out during the COVID-19 pandemic to help businesses to automate and digitalize. So I'm not too sure whether they're going to extend another year. So make good use of it now that it has been extended to another year till June 2025. Okay, some of the initiative you can actually benefit from, for example, the Enterprise Development Grant, or what in short we call EDG. So there are support for you to automate your human resource process. That means like, your payroll, your human resource in terms of capturing your staff leave, annual leave, and so on and so forth. And also supporting you in terms of marketing and branding. So you need some expert to come in to help you to look at rebranding your business and carry out some marketing campaign. This EDG grant will support you. So this is a very useful grant. So I really encourage you to look at it and see how you can benefit from it. Next up is the Productivity Solution Grant, PSG. Again, this has been around for quite a while. So this again, please really look into it and see how you can tap this grant. This is very useful, because it gives up to $10,000 and it can support you from 70 to 90% of what the expenses that you're going to incur. Some of this, like like I mentioned earlier, you can use it to do tracking your staff attendance and so on. And also for your accounting. So you want to move on from some online accounting software and things like that. These are some of the grants that you can really look at. Next is also the WSQ courses grant that they are giving, right? So these are more training related, right? Service training, performance management, healthcare assistant training. So all these three category of scheme that they have give very good support, right? So like I say, really look into it. If you need any help, as you can see, our Valerie is there with your email underneath. Can come and consult us to tap into some of this grant that we have. So don't miss out, because we do not know whether they will still be around another year. So they have been around so long, so better take the opportunity and utilize this grant, right? Okay, so there are also areas or schemes where they what we call a workforce policy that affects the workers that you have. So as you can see here, some of the things that they are touched on is the Skill Future Level Up program, enhancement to the workfare income supplement scheme, raising the local qualifying salary. Okay, this one is really a big thing for us. I will go into detail how it impact many businesses when they want to adjust this LQS, local qualifying salary. Also, there will be enhancement to the progressive wage credit scheme. This, like I say, is not new. It has been around since 2021, also during the COVID years. I hope you still remember what is it. So I'm going to revisit it and also talk about the slight enhancement that the scheme are giving in budget 2024, because it's still not too late to make use of it, right? Again, another thing that will impact both employers and employee is the increase in senior worker CPF rate. As you are aware, over the past few years, the government have been adjusting the senior worker CPF rate year by year. So this year they are doing further adjustment, right? So that will hit your bottom line because that will increase your cost. And also for the employee part, they will have less take-home pay, right? So, okay, so first we will look at the Skill Future Level Up program, right? So this, there are 3 areas where they are doing some adjustment to the Skill Future support. First is the Skill Future Credit Mid-Career Top-Up. And then there will be this support for subsidized full-time diploma course, Skill Future Mid-Career Training Allowance. Okay, all these 3 enhancements impact most of you in terms of if you have worker who want to further study or to upgrade themselves. So these are very good initiative, whether you are employer, employee is to take advantage. Okay, so for this Skill Future Level Up program, this series of enhancement is merely for the workers, but it's important also for employers to understand what this scheme are all about and see how you can tap it. While the main beneficiary is the employee, but I mean, when you have a better trained employee, come back more competent, improve in terms of skill set, it will benefit you as an organization. All right, so first is the Skill Future Credit Top-Up. Yeah, sorry for the typo here. Right, this is mainly for the individual. So any Singaporean age 40 and above. Okay, currently all of us have 1,005 Skill Future credit. Hope some of you have hope all you have start using it. On top of the 1,005 which was given in the previous year, now they are going to give another $4,000 to your Skill Future credit, right? And for any Singaporean that are age 40 and above, they will get this top up. So don't worry if now you are still young, maybe you are in your 30s, 35, 38, or even 39. You won't get it now, but when you reach the age of 40, that will be automatically credited to your Skill Future credit account. So any Singaporean, when they reach the age of 40, they will get it, right? Right. So don't worry, you are not 40 yet, but when you reach 40, this $4,000 will come to you, right? So for those who are 40 and above, I think in the coming months, they have not announced when exactly they will top up your accounts. But for those above 30 now, at this moment, you will get this 4,000 top up to your Skill Future credit. Make full use of it. All right. There are a lot of courses available for you to enhance your in terms of your skill set using this $4,000, right? And the best part is there is no expiry date. That means you can have this $4,000, keep it there as long as you want. But like I say, don't keep it there not use it because there's no interest earned on this $4,000. All right, so make use of it as now to upgrade yourself. There are a lot of courses available, so make full use of it. Okay, next is a very, very I would say very good in terms of support for those of us who want to go back to school and do a full-time diploma course. All right. So if I'm not too sure whether you're aware is that in terms of full-time diploma courses, you in the past you only subsidized once. Let's say you clear your O level or your A level, you went on to do a full-time diploma course. That's it one time. So later in the years, you want to do another diploma course. Let's say your first diploma course is in accounting, right? When you are at the age of 18 or 19, you enroll into Singapore Polytechnics, and then you study a diploma in accounting full time, all right? Then after that, you graduate, you go to work, and then later on after working, you decided that you want to do more. So in the past, you have a diploma in accounting. So now you want to do a diploma in marketing, right? So that you have another skill set for you. So in the past, you only enjoy one-time subsidy. So if you do another full-time diploma course, you have to pay full fee, right? So now government has said, okay, if you are interested to upgrade yourself beyond that one diploma that you already have, you want to do a second diploma, they're going to subsidize you, right? Going to give you a subsidy to support you for another second diploma at any of the polytechnic, ITE, or any of the arts institutes. Arts institute at the LaSalle, schools and all that. So again, this is for Singaporean age 40 and above, right? So if you're 40 and above, you want to do another course, you will get this subsidy. Okay, next scheme that they have, this is again very generous scheme. They will give you allowances, training allowances, 50% of your current income, which is average over the last 12 months. So if you are earning a fixed income 3,000 every month, that will be 3,000, with fixed salary. But for those who are on commission base, your salary may fluctuate every month. So what they do is they will average your 12 months, the last 12 months income, right? And then give you an allowance, 50% of the income, capped at 3,000 a month, right? So I say this is very good because you can then go on a sabbaticals, right? So if now you're working, you can talk to your boss and say, I want to go away for 2 years on a sabbatical leave and take my second diploma course, all right? And government will support you, 50% of your salary, average salary, capped at 3,000 a month, right? Quite good. And these allowances will be given to you for 24 months, right? For 24 months, right? 2 years. So generally, most of the diploma course is about 2 to 3 years, depending on what are the diploma course you are taking. So this is again a very good subsidy. All right. These are also for workers, Singaporean 40 and above. All right. Full-time course. So this one, if you are working, like I said, you have to talk to your employer if you're a worker. So this allowance scheme will only start in 2025. So you have to start talking to your bosses if you are interested, or you are the boss, you are the employer, and if you find that you are deserving staff, that you support them to upgrade themselves And one way is for them to do a full-time diploma course. Then you can actually take advantage of this scheme, whereby the staff salary will be paid by the government, at least 50% or cap at 3,000 a month. So that is very good, right? For employer who are supporting your staff to upgrade themselves. Right. So like I mentioned, this cover quite a wide range of qualification. So it can be diploma, it can even goes up to undergraduate degree. Right. So you have staff who want to upgrade, or you are supportive of your staff for upgrade. So these are the grant that the government are providing. Right. So as you can see here, this skill future, just now earlier the skill future credit, and now this skill future level up allowances and so on, really provide very good support to enhance the skill set of your employees, so they can do more value added job, right, for the company. Okay, next is this enhanced workfare income supplement. Okay, this workfare income supplement has been around also for a few years already. This one, employer need not do anything. It's automatically pay out by the government to the staff, right? Not to you, okay, not to the company, right? It's paid to the staff. So for any employee with a qualified income of 3,000 or less, right? Previously was 2,005. Now they have up it to 3,000. That means any staff earning 3,000 and below can qualify for this workfare income supplement scheme. And it covers a worker from 30 years old onwards. In the past, it started from 35. This year, they have provided an additional band to support those who are from 30 to 34. And they can pay up to 4,009 a year, right? Minimum qualifying salary is 5,000, right? $5,000. It's like $500, right? Minimum. So long as staff say have a monthly salary of 500, they are given a workfare income supplement. Okay, the scheme is basically to encourage more workers who come back to work, because a lot of them may have I won't say retire, but some may have stopped working because they take care of the family. And then now the government want to encourage them to come back to work. So on top of the normal salary they get from the employer, the government is also giving this employee what we call workfare income supplement, paid direct to the employee. All right, so long as they satisfy all these criteria, 30 years old and above, salary is below 3,000, so they get some support from the government. All right, up to a maximum of 4,009. So and you look at the qualifying salary is very low, 500. That means the employee can be a part-time worker, right? Employee, a part-time worker come in to support you, they get this workfare income supplement too, right? So this to encourage more worker to come back to work. Okay, so this is the supplement, the support that the government give in terms of workfare income supplement. So the 30 to 34 each one from the previous 2001, they can now get up to 2,450 a year from next year onwards. So that means the qualifying period is this year, right? So long as they start working, next year they can get this support, right, up to 2,004 a year. Okay, but actual payout varies. This is the max they will get. So depending on the salary, so if there's some formula there, I haven't gotten the formula yet. I think they have not really released the details yet. But basically, this is the range of support that the government give for those who come back to work, right? And they even give those 60 and above, right? 60 and above, you come back to work, you get workfare income supplement of up to 4,009. Okay, next impact a lot of businesses is this upping the local qualifying salary. So what is this local qualifying salary all about? Is that for you to apply work pass or S pass, you must have certain number of employee, all right? And this employee, local employee, that means Singaporean PR, that are paying CPF. So currently, in order to say qualify as one head count for the local salary worker is 1,004. That means in order for you to consider this local staff as one of the head count in terms of the quota in terms of ratio for employing work pass or S pass holder, currently is 1,004, right? Come this year, July. So this one is very, very going to happen very soon, right? This is going to happen in July this year, 2024, this year. They're going to increase it to 1,006, 1,006. So it's a $200 jump, right? So it's quite a lot of money, right? So if you need 9 or 10 local worker, in the past, each worker you are paying 1,004, all right? So if you have 10 local worker, in order for them to be counted as a head count in terms of the work pass ratio, you have to increase another 200. So 200, if you have 10 local worker times 10, is $2,000 extra a month, right? And then this $200 also inclusive of CPF and all that. So your cost, manpower cost is going to increase if you are employing work pass holder, as pass holder, because all the quota that you need in order to satisfy the head count, now you have to pay more from 1,004 to 1,006, right? Um, so as explained further, 1,006 you get one head count, $800 you get a 0.5 head count for local worker. All right, so this is how it's going to happen. So you have to relook at currently what is your requirement for foreign worker, where you need them for your work pass or S pass, because the local worker qualifying salary is going to increase by $200 to 1,006. It's going to happen soon. Like I said, it's going to be happening in July. So you have to relook at your manpower cost. So in your budgeting and all that. All right. So while you increase pay of your local salary, the government also say, I'm going to help you, right? So that's why they have this progressive wage credit scheme, right? Okay, this one, the progressive wage credit will be given to the company, and employers will get this. So every time you increase your staff salary by at least $100, government will support you, right? Support you on a certain percentage. And this progressive wage credit scheme is not new. It's also something that happened since 2022, right? It's going to be going on till until 2026, right? Government will support you for 2 years on any of the salary increase you get. And so long as you increase $100, government will support you. So like just now, the local worker, right, 1,004, you need to increase their pay to 1,006, right? So out of the $200, government will support you for 2 years in terms of the increase. So later when you go back and look at your manpower cost, on top of taking into the increase in terms of the $200 for the local qualifying salary, you also have to look at this progressive wage credit, because government will help you pays part of the salary of the increment that you're going to give. All right. So what are some of the requirements you need to do? Firstly, there's no need for you to apply so long as you do your salary adjustment for your local worker and over 3 calendar months, you can qualify. But you have to look at the bottom part. If you are the owner of a business, a partner in a partnership, shareholder and director, they will not be included in this progressive wage credit scheme. Right? So take note. So you have the owner, director, you adjust your pay, it's not going to impact. you're not going to get this, right? Anyway, this is only capped in terms of worker getting 3,000 and below, right? So this is how this thing works. Basically, this progressive wage credit scheme. Okay, so like I say, this has been going on since 2022. It's not new. So just some refresher. If you look at 2022, they are supporting 75% of the wage increase. So let's say you increase $100 of your staff salary, government will pay $75, right? $100 a month, right? So government support you $75 per month. So it comes 12 a year, and they're going to give you 2 years. They support you over 2 years, right? So the first tier is for those with salary below 2005, with a higher quantum of support, 75%. And then for those who are earning 3,000 and below up to 2005, 45% support, right? And like I mentioned, it has been around since 2002. So now we are at 2024. 2024, if you adjust any pay in 2024, in the past, it's 30% and 15%. But under the enhanced scheme now, the new scheme now, this year onward, 2024, it's going to be up from 30% to 50%. That means if you increase, like just now, like I mentioned, we talk about the foreign worker quota, you increase local worker $200 from 1,004 to 1,006. So there's a $200 increase, right? The government will support you with $100. If this local worker is currently drawing a salary of 2,005 and below, right? But if this worker is drawing 2,000 and above, up to 3,000, then the subsidy will be 30%, right? Again, this support will go on for 2 years. So it will happen in 2025, 2026. So if you are adjusting pay in this year, 2024, you can see that the government is supporting you for 2 years, right? So I will give you an example to let you better understand how this thing works. It's a bit complicated if you just look at the percentage in this manner, right? Okay, so just want to illustrate. So if you have a worker that is drawing 1,008, okay, I'm starting in 2021 because I've done this presentation back in budget 2022, so I'm using it again. But just that I have adjusted the enhancement for you to see. So it have been, I say it's ongoing for quite a while since 2022. So we have this worker started 1,008 a month, 1,008 a month in 2021, and every year he get $100 increment. All right. So as you can see, you start the salary adjustment in 2022. If the increase is $100 from 1,008 to 1,009, government support you $75 a month. So for 1 year, government will support you $900. Right. So while the increment is $100 a month, the cost to the employer is 1,002, right? But the government said I'm going to give you $900. So the actual increase in salary cost to the employer is only $300, right? Because government will subsidize 900, while you come up with 1,002. So net increase in cost to you is only 300, right? So because the government is supporting you, right? So as his salary progress, let's say now we talk about 2024. So in 2023, this employee was drawing 2,000. So if you increase his pay in 2024 by $100, government will give you 50%. This is the enhanced amount. If you look back just now, the slide, it's only 30% in the old scheme, but now they're going to enhance it, up it to 50%. So for this, the government is going to support you. So you can see it's 2 years, 2 years, right? 2024, the $100 government is giving you a 50% increase. And for 2023, when you do the increase from 1,009 to 2,000, government is giving you 75%. So total you get 125, right? This is a very good support, like I say, for 2 years. right? So government is subsidized you 1,500 per worker annually, right? So as you progress to 2025, the subsidy will drop to 30%. That's why you find that the uh, yearly progressive wage credit also drops slightly, from 1,500 to 960. So while you have increase in the salary cost, but you also be mindful that the government also supporting you lah. So you want to make your employee happy, it's a win-win for all. You increase their pay, government also giving you more subsidy lah, right? So you are not bearing all the increase in salary. Government is supporting you over 2 years. This year is going to be a 50% increase. But be also be mindful, these are only for workers drawing salary 3,000 and below, right? Anyone more than 3,000 will not enjoying this scheme, right? Okay, also, this illustration will show you how this progressive wage scheme works, right? So again, this one you need not apply. How the government know? Because when you submit your CPF submission every month, right, they will track the increase in salary, all right? But you may ask for those salary fluctuate every month. Then I think CPF board they average it out. Again, they average out over 12 months and do the calculation, right? So again, these are not for you to submit or do anything. This is automatically because whenever you submit CPF, you provide all the ordinary wages, additional wages information to CPF board. They will calculate and they will disperse this grant to you. All right. So just to move back, I think the grant are payout in Q1 of every year for the previous year lah. So if you in 2023 you have given out some increment, you're going to get pay in 2025, right? Sorry, in 2024 Q1, right? So that way you get some support lah very quickly, right? By within 3 months of the year end. Okay, next, as I say, this CPF contribution rates for senior worker have been adjusted for the past 3 years or so, as the government want to build up the retirement funds of the older workers. Definitely, this is not just for. On top of that, if you are aware, the CPF in terms of the special accounts also have been having some adjustment where they will close the special account and whatever money in the special account we're going to top up to the retirement account, and only when if there's any excess, then we'll go back to the ordinary account. But this one I will not talk too much because it's very much an individual kind of matters. Today I just want to focus on the business part of it. So for CPF rate for senior worker, because this impact both the employer and employee, right? So coming months, this 2024, this is the rate that we are currently paying, right? This has been adjusted from last year, right? Last year was not this rate. Last year was a lower rate, right? But this year, January, we are already adjusted upwards, as you can see here. So again, while employers are having to pay a bit more in terms of CPF contribution for senior workers, government is also giving you this CPF support, offset, so-called CPF increase offset of 0.25. So for 1.25% increment, government helping you with 0.25. Not a lot, but at least something, right? So come next year, again, further adjustment. So from the earlier 31% for those 55 to 60, they're going to increase another 1.5%, combined rate of 32.5. Okay, so this is split into employer 15.5%, employee 17%, right? So employee will have to contribute 1% more as compared to this year 2024. So in 2025, again, this adjustment will be supported also by a 0.25% offset given by the government. Again, this one you need not apply. The government will be paying to the employer direct. Right. So for this adjustment, they only affect those 55 to 65, right? 65 to 70 or more than 70, no change, remain. So as you can see here, again, you have to work out in terms of the impact that you will suffer when this new CPF rate comes on board in 2025 for senior workers. So this is an additional cost. Net increment to you is 1.25, right? So even though the overall cost is 1.5, government give you 2.25 lah. But actually for the employer is lesser lah, because employer the increment is only 0.5 and government give you 0.25, so it's only half lah. The employee will have to have less take-home pay, right? Because the government retain more, so the employee will have 1% less to take home when come 2025. Okay, salary ceiling will also be adjusted. Already this year we have adjusted to 6,008. That means if you have workers drawing high salary, those drawing 8,000 and above, you will find that the monthly CPF ceiling have been adjusted this year already to 6,008. Come January to 2025 will be further adjusted to 7,004 and eventually hitting the 8,000 monthly salary ceiling in January 2026. So again, this will impact the employer also, because the employer will have to contribute more to the workers, because if you have a cap in the past was 6,000, and then last year they increased it, and then now it becomes 6,008 this year. So employer also have to pay the CPF on the increase in the ceiling, right? So when you work out your salary costs, have to take into account the high salary income earner in terms of CPF contribution, right? So for employee who are also in the high income earner bracket, you'll find that you have lesser take-home pay also, right? Because now you have to pay more CPF out of your monthly salary towards your CPF account, right? So this is the impact lah. But you will look at on the right hand side the annual income ceiling have not adjusted still stuck at this amount 102,000 a year, so no change, right? I don't know why. Actually, okay, the reason is that they don't want people to. Okay, this annual income ceiling, CPF annual income ceiling, contribution ceiling, is to prevent people from manipulating. Because if you are aware, CPF deduction for employee, when it comes to personal income tax, you're deductible, right? It's deductible. So in the past, there's always manipulation. You pay low monthly salary and pay very high bonuses year end, So that way because you see for ordinary salary, you have a cap, right? 6,008. But for additional wages like bonuses, there's no cap. When it comes to CPF contribution, you can pay beyond 6,008, right? So if you pay $100,000 bonus, your 17%, so 20% for employee will be based on 100,000. It's not capped at 6,008. So that's why in the past, a lot of people that was very early years, about 15 years ago or more. So that's why they pack it to 102,000 total salary, so that you cannot manipulate in terms of the CPF contribution deduction in terms of personal income tax. Right, so this is the same, no change, just to show you in terms of, instead of just giving you some figures, sorry, percentage, just want to show you how it impact the employer and the employee in terms of the additional cost to employee, additional cost to employer, and the lesser take-home pay for employee, right? So if you are drawing 6,008 now, you will have a deduction of 3,003. But come next year, the deduction is 1,004. So that's why you are going to take home lesser, right, for employee. And for employer, the increase in terms of the CPF contribution, right? Okay, so this is what we have for the workforce policy. Next, we will go into the corporate tax side or the income tax. As you can see here, there is a corporate tax rebate and also a cash grant. This is very interesting. We don't have a corporate tax rebate since YA 2020. Right, so there's a 4 years gap. Last 3 years or so, no tax rebate. You basically pay every dollar, but now we have a very generous tax rebate. The last time YA 2020 tax rebate is only 25% and capped at 10,000, 15,000. But later we'll tell you more. There's also some changes to the deduction for renovation and refurbishment. Again, some good news. And for those who are doing some investment, there's this deduction called refundable investment credit, a very new initiative. Not much details yet, but we'll share with you whatever is available, right? And next is something to do with those multinational. Those may not impact all of us, but just for interest sake, I just want to touch on it. Okay, first off is the income tax cash grant. This again, don't recall a cash payout in this manner. Then the last time they have those cash payout, those PIC and all that. For income tax cash grant, I don't recall seeing this. Probably the first time, you know. That means the government give you $2,000, right? For companies that have at least one CPF employee paying, so one employee paying CPF in 2023, right? Will exclude shareholder who are also director in the calendar year 2023. So long as one employee, non-director, non-shareholder type, that have made contribution in terms of CPF, you will get a $2,000 grant, right? And it will pay out in quarter 3, 2024. So basically, a lot of companies will benefit, right? I will foresee only those investment holding company where you earn rental income and you probably don't have a full-time staff or staff that you contribute CPF. So generally, this investment holding kind of company may not enjoy this cash grant because they do not have CPF contribution need for employee. But other businesses that are carrying out, if you're a clinic, if you're a trading company, if you are a retail company or F&B, I'm sure you have paid some CPF for your local employee. You'll get a $2,000 grant, right? So very simple qualifying requirement. Give you cash, all right? Very good. As I say, don't recall seeing this in the past year that government give you $2,000, all right? And I want to say this is only for private limited company. So if you are sole proprietor, a partner in a partnership, you won't get this because sole proprietor and partner in a partnership, they pay personal income tax. This is for corporate income tax. So this is a benefit if you run a business using a private limited company. You get $2,000. So you are sole proprietor, you are a partner in a partnership, you don't get this. All right, you get personal tax rebate, income tax rebate, which I will cover later. But for companies, you get $2,000, right, in Q3. Q3, that means between July, September this year. Right, so for companies, it's good. Right? You get a cash. Especially for a company that making losses, they don't pay tax, so they don't enjoy the tax rebate. They're going to get this $2,000, right? So next is the income tax rebate. That means on top of the $2,000 cash grant, company will enjoy corporate tax rebate of 50% for YA 2024. That means income earned in basis period 2023 lah. All right. So this will be a cap up to $40,000. Quite generous. Like I said, I checked back the previous years. The highest I see is $25,000 cap, but this is $40,000. Quite impressive, if you ask me. Later I will show you some example. Then you can see how much in terms of benefit you get. Or this cash rebate is quite good, right? Okay, but bear in mind here, this 40,000 also include the $2,000 that I talked about earlier. Just now I talked about cash grant that give you $2,000 every company that make contribution CPF. All right, so 2,000 also includes including inside here. All right, so in a way you are paying a lot of income tax. Then the $2,000 is already used to offset the tax paid. So I will show you some example how it works. So for a loss-making company, not making money, so probably don't have tax to pay, they will get the $2,000 outright, right? So this basically what happened, like I mentioned here, right? So the 2,000 is inclusive in the $40,000. Okay, so we start off this company, this illustration of a company that has tax payable more than $2,000 in terms of cash grant, right? So let's say that the tax payable, that means the income tax that is supposed to pay is $30,000. So as I explained earlier, you are supposed to enjoy 50% tax rebate. So you look at the center, the middle column. If you take 50% times 30,000, you're supposed to get a $15,000 tax rebate. But like I mentioned earlier, this 15,000 is supposed to include the cash grant of 2,000. So net in total, you only can get 15,000, which is the 50% of the tax rebate, right? So if you are paying tax of 30,000, after the $15,000 tax rebate, you only need to pay net 15,000. All right, so quite generous, like I say, you're going to enjoy quite a lot of tax savings in YA 2024. Right, that means your basis period 2023. Right, so this is for a company where the tax payable is more than $2,000. Right, so complication will come later. I'm going to show you in the next example what happens if your tax payable is less than $2,000. Okay, if you have a tax payable of $3,000, so you work out 50%, it's supposed to be 1,500, correct? But you're not going to enjoy 1,500, right? So and then minus 3,000 minus 1,500, and then pay 1,500, and on top of that you still enjoy 2,000, right? So that's not how the thing works, lah. So basically, if your tax rebate, 50% tax rebate is less than $2,000, basically when it comes to tax payable, you will not have any rebate. It's zero rebate. So you will still pay $3,000, right? But if you look at my left-hand side, you actually get the 2,000 cash grant, right? Earlier I mentioned every company gets $2,000. So if you're paying 3,000 now minus 2,000, your net tax payable is 1,000, right? So you still enjoy, right? At $2,000, but you don't get the tax rebate now because your tax rebate of 50% is less than 2,000. So I hope this can be a bit confusing. And when I first look at it, it takes me quite a while to understand how this thing works. So basically, what the government is saying, that I already give you $2,000 cash grant, to help you pay for your tax, right? So your tax rebate is less than 1,500. So basically, you don't get anything. They ask you to, they say take 2,000, offset it against your tax payable of 3,000. Okay, the timing of the cash grant and the tax payable can be a bit trickier, because you remember the cash grant is going to pay you in Q3. But when you file income tax, we start filing income tax sometime in June. So you will find that you may pay tax first, then later you get the cash grant later. All right, so there may be some timing difference. Or it can happen because you see income tax filing is 30th November 2024. So you file late, won't say late lah. You file say not in quarter 3, you file in November. Because quarter 3 is July to September. Let's say you file in October and November. You will find that you'll get your cash grant first, and then your tax payable will be offset again. Right, so that there's going to be some confusion here, huh? All right, so so this cash grant and the timing you file your tax, there's this offset. It's going to be a bit confusing. So I would suggest this coming year when you receive a notice of assessment, please take a good look at it just to make sure the government have offset it correctly for you. All right, so don't just take. I know a lot of my clients, they don't really look at notice assessment. Right, so it's so it's important you look at it because of all this cash grant offset and tax rebate. So study it before you start paying your tax, right? Because it can be very confusing because of the timing of the cash grant and all that. Okay, just to illustrate how this 40,000 tax rebate works, and who actually can maximize it. Right, so I just show you this illustration here. So for a company that is having $500,000 chargeable income, this one not tax payable. This one is, that means you have your trade, that's your net profit minus all the deduction, and then you come to this final figure. And then if you recall, we have this partial tax exemption also for companies, right? For those new company, first 3 years, you have the full tax exemption. The amount is different from my illustration here, but for the benefit of most of us who are 4 year and above kind of a company, I will show it this way. So for those who are currently 4-year-old kind of company, where we have a partial tax exemption, you will find that after your tax exemption, you know 100 over thousand, and your chargeable income is about 470,000, right? So under normal circumstances, your tax payable will be 17% of 470,500. All right, so your normal tax bill is about 80,000, right? In this case, it's 79,000 plus, but it's about 80,000. Remember, because you have the 50% tax rebate capped at 40,000. So you can see over here in the middle column, I work out cash grant 2,000, 50% of the 79,000 is actually 39. But as I explained again, you won't get 39,000 because you have to take away the $2,000 cash grant, and on top of that, there's a cap, right? The maximum you can deduct cash grant plus rebates is only 40,000 max, right? So in this case, you pay after all this tax rebate and cash grant, you pay only 39,900 or 40,000, right? So for a company that's earning $500,000 chargeable income, your effective tax rate is only about 7%. It's quite low, even lower than a personal income tax, right? So again, the benefit of having a private limited company is this whole package that you have, what you're seeing now. Sometimes some of these initiatives are only given to private limited company. They're not given to sole proprietor, they're not given to partner in a partnership, right? So you can see the benefit of a private limited company in this illustration. So if the more you earn, the more tax rebate you get, right? So this is a company that has 500,000 chargeable income. Effective tax rate is only 7%. Just to show you what type of company will enjoy the maximum benefit when it comes to this tax rebate. Okay, next touch on is this what we call Section 14N deduction. Again, when we do renovation to your factory, your warehouse, your office, technically in the tax law, there's no deduction because these are capital expenditure, right? And capital allowance are only given not on some renovation item, right? But because of Section 14, they allow you to make some deduction so that to help businesses who need to do up their office, do up their factory, do up their warehouses and all that. They give you some deduction up to a maximum cap at 300,000 per year over 3 years on certain renovation expenditure. In the past or currently, you cannot exclude. Sorry, currently you cannot deduct designer fee, or if you engage an engineer to do certification of some structural work, you cannot get deduction under this 14N, right? But you're going to be enhanced. So come YA 2025. So be very careful. 2024, YA 2024 don't have this. This is only for YA 2025. YA 2025, that means for things that happen in 2024 lah. So if you are planning to do some renovation and things like that, it's a good time to do, right? Because it's going to be enhanced. Firstly, it will include designer fee. So you have an ID, interior designer, to help you to design. The fees can be deducted now. In the past, you cannot do it. If you're doing some structural changes to your premises and you require engineer to do some certification and so on, the fee can be deducted now. Or sorry, not deducted now, I mean as in YA 2025. And you can get a 3-year deduction, or you're also given an option to do a 1-year deduction. All right, so take note, right? So when it comes to deduction, we will assist you lah. This one, if we are the tax agent for you, come YA 2025 when we do your tax computation, we're going to assist you. But do know we're going to be pestering you for some document. Because to claim this, we need to examine what the contractor are billing you for. So we were going to come to you and ask you, can you give me the invoices that the contractor have issue you, and we want breakdowns. In order to claim all this, we will normally require you to provide with breakdowns. I always see some contractor only give a one lump sum figure. If it's a one lump sum figure, we can't deduct, right? So you need a breakdown. So when you approach your renovation contractor, make sure they list down like that. But I'm sure you will when you get your contractor to do a quotation, they will list down what are the things they are going to do for you. So it's important you get the quotation plus the invoice with similar information, because sometimes quotation and invoice can be different, because you may have add-on or you may have deduct some item that you don't want. So quotation may not be the best, but still invoice. But like I said, invoice we need breakdown. So please go back to your contractor and help us to obtain this information. Right. So one good thing, like I say, the designer and professional fee can be deductible come YA 2025. Okay, this is a new one, this refundable investment credit. It was not there in the past. A very good, like I say, new thing for us to claim further deduction, right? So you can claim up to 50% of the expenditure, and all this expenditure are mainly capital in nature, right? That means normally under capital allowance, there's a very strict criteria to qualify. But with this refundable investment credit, you can see that a lot of the activities, even though capital in nature, will enjoy 50% deduction. For example, you constructing a new manufacturing plant, or you are in the production of low carbon energy kind of business or equipment or machine, you're going to find that you will enjoy 50% deduction. Or you are doing something in digital professional supply chain management. Some of these things that you invest in can be given deduction. Okay, at this moment, there's not a lot of details available. Later on, when more information are available, we'll share with you. But basically, this is some of the outline that are given. Right? So if you are into doing some enhancement to your business premises, or in terms of your plant and equipment, this is a good time to do it, because this is where you get this refundable investment credit. And I hope this credit will stay on, because some of these things maybe only for a few years. So no details yet, but like I say, something to look out for. All right. So so this is a qualifying period of 10 years now, guys. So hopefully stay on for more. Right. So the credit can be used to offset against income tax payable. Well, this is very significant. When we talk about deduction earlier, like Section 14 on renovation, and these are deduction against your income. and not your tax payable, right? So after your profit, you minus the expenditure. And after that, you get a net figure, then you times 17%. Right? So this one is like just now we talked about income tax rebate. It's actually a deduction against the tax that you pay, which is better than deduction against your income. So always we look forward to rebates, income tax rebate, because that one will reduce your tax payable straight away, right? No need to have deduction in the chargeable income side. Right? Straight away you will reduce your tax payable, which is very good, right? And some of this credit can be refunded in cash. Right? Like I said, we don't have details yet because they're going to announce it in the third quarter. So it's something that we can look out for because this is a very good scheme if you know it covers a lot more businesses. Because like I say, this is offset against income tax payable. It's not a pure deduction. Okay, next one, not really affect most of us. This one is mainly affects those multinational enterprises, right? With annual revenue of at least 750 million euro. You see what happened is that a lot of the other countries, because some countries like Singapore, Hong Kong, or even Ireland, our income tax rate is very low, 16, 17%. So the European country, the US are not happy because they are charging a higher corporate tax rate. So that's why they come together and say that, hey, it's not fair. Some countries are paying lesser tax to attract businesses and so on. So they come together and say that we should equalize this type of tax lah. So they set this effective tax rate of 15%, right? And say that businesses at least must pay 15%. And so one income earned in Singapore can be equally taxed in, say, US. If this is a US company that come to Singapore, 15% and so on. So they just want to equalize the tax. So don't affect a lot of us, but just for information that I thought it's good to know. Right? So but I just briefly talk on it. Okay, next is about donation. Right? Currently, most of the donation you can deduct against your chargeable income or your income is a local charity that what we call Institute of Public Character, IPC. Those are specially licensed where you make a donation to this local charity that holds the Institute of Public Character, IPC. You get a tax deduction. But when you donate to some overseas charity, you are not allowed any deduction currently. So they're going to implement this, that you are allowed to make deduction 100%. Right? For those local Institute of Public Character charity, you get 250%. But for foreign, you get 100%. So there's a difference in terms of local donation and overseas donation. You only can donate in cash, cannot be in kind. In Singapore, you can donate in kind and still enjoy the donation deduction if you give to IPC, right? And for this donation to be allowed for deduction, it must go through a local charity, right? So you cannot donate direct. You cannot donate direct to the overseas charity, but it must go through a local designated charity for the donation to qualify for deduction. So there's some requirement here, right? Okay, so there's also a cap 40% on the statutory income, right? For the local donation, if you cannot offset fully the amount, you can carry forward to the next year, all right, up to 5 years. But for this overseas donation, you cannot carry forward. That means whatever you need to deduct, you only can deduct in the year assessment that you make the donation. Also, it cannot be utilized in the group relief, right? Group relief system, right? So some restriction here, some restriction in terms of this. But at least it's a good step forward. In the past, you can't get deduction from donating to overseas costs, but now you can. So even though there are a lot of restrictions, but at least it's a first step. Hopefully, this thing can be a bit less onerous going forward. But at least it's a good start. Okay, so far so much things to talk about in terms of the corporate tax side. So we move on to the personal income tax. So there's also a tax rebate in personal income tax. There's also some adjustment to the income threshold for dependents and caregiver. And then they're going to take away something from us. All right, they're going to take away this cost fee relief and also the CPF top-up relief for the retirement scheme later. Okay, first, personal income tax rebate, 50%, but capped at 200. So you can compare just now the corporate tax is 40,000, but when it comes to personal income tax, it's a very miserable $200. All right. So while the 50% sounds very big, like the corporate tax also gives 50%, but because it capped at $200, so it becomes very miserable amount, right? Corporate tax is 40,000 and personal tax is only 200, a very small amount. Probably because I think government think that they give a lot of CDC voucher, cost of living allowance, a few $100 and so on. So they don't give you so much in terms of tax deduction. But still good, $200, right, if you can max it, right, like in this case. Okay, so not a lot, so only cap at $200. Okay, next is the dependent and caregiver income threshold. Okay, just some background to it is that currently, if you are claiming those relief on depend where you like those handicap child relief and so on, there's this $400 income threshold. That means if the dependent or the caregiver income during the year is 4,000, then you cannot claim the relief. Right? So the amount is very small, $400 a year, right? So they're going to increase it to 8,000. But even 8,000 actually is quite a little, right? $8,000 divided by 12 months, it's also quite low. But at least, again, like I said, it's a step forward that at least they review it and up it to 8,000. And hopefully they're going to increase a bit more. 8,000 over dollar is quite miserable, right? So, but this is not the relief amount. Okay, the relief amount is not. This one is the income threshold. That means, let's say you have a handicapped child. If he's earning income more than 9,000, right? So it won't qualify come YA2025 because our increase is only up to 8,000. So if he earn $9,000 annual income, so he won't qualify for all this relief. The relief that are affected by this increase is those spouse relief, parent relief, qualifying child relief, working mother child relief, and so on and so forth. So these are some of the relief that are affected by this threshold. It's not a lot, like I say, but at least something to go forward. Okay, next is something that they take away. So if some of us are attending courses, like I said just now, we talk about going to attend a diploma course and things like that. You can actually deduct up to 5,500 in terms of relief, right? But come YA2026, this will be taken away. The rationale given is because the government is already giving you a lot of support. Those I mentioned earlier just now, like those skill future credit, top up of $4,000, and then also in terms of the full-time courses that they're going to give you subsidy plus training allowances, right, capped at 3,000. So they think that this cost fee relief is redundant, right? So they're going to discontinue it from YA2026, right? So do bear in mind, if you have been claiming all these cost fees relief in your personal income tax, going forward, you will not be able to claim from YA2026. Okay, another thing that they're going to remove this CPF cash top up. Okay, this is not removing all the CPF cash top up relief. They only targeted at those retirement savings scheme type of top up. If you are aware, there's a various type of CPF top up relief. That means sometimes you top up your spouse uh, CPF account by $8,000 or your own self $8,000, you can enjoy a tax relief of 8,000. Your one or your spouse or your children and all that. But what they are taking away is this retirement saving scheme. That means you top up into your retirement saving accounts. I don't think a lot of people are doing that, right? That's why I think they're going to take it away, right? So, but the other normal CPF top up still remain, still continue. So not to worry. It's a very specific area they are taking away, which is this match retirement saving scheme. Okay, so we finished the personal tax. Next, we touch on, like I say, even though this is does not affect businesses and so on, but I just want to share a bit on this part on the individual in terms of a property tax, right? So they're going to adjust the annual value band and also extend the gyro scheme for property tax payment. Okay, what it means is okay, just to explain what is annual value. When you pay income tax, beside the tax rate, right, the property tax rate, whether it's 4%, 6%, there's also this base amount, what we call annual value. That means you must have a value, annual value, like for example, $8,000 annual value time 4%. Right, sorry, not a good example. Let's say annual value is 10,000, then times 4%. So annual value is like estimated annual rental income. So should you rent out this house, this is what the government or IRAS estimate that this rental you will get, and then they will use the tax rate and times it, right? So I'm not too sure whether you have read the papers a few weeks ago, or even last year budget. They actually adjusted the property tax rate and also the band, right, for property tax, and because of that, that you pay higher income tax, and also because uh, generally the rental market have increased quite a lot in terms of rental. So the annual value of a lot of properties also increase. So you can see that when they increase the property tax rate and the band, and also because the annual value last year also increased, a lot of house owner find that in 2024 they are paying a lot more property tax compared to past year. All right, because the annual value have increased quite a lot, right? So we definitely for owner occupied, most of us will get upset because we stay in the house, we don't really earn rental income out of it. All right, so when the annual value increase, it affect us. Right? But we stay in our own house, we don't rent, there is no rental income for us. But we suffered because of the annual value increase. All right, so because of that, right? So in 2025, they are going to adjust the band. There's no adjustment to the property tax rate. You can see on the right hand side, the property tax rate is still remain. But however, in terms of the annual value band, they have stretched it a bit. So currently, 2024, the annual value band is from $0 to 8,000, right? At 0%. That means you don't pay property tax if you have annual value less than 8,000, right? So let's say your annual value is 6,000, you don't need to pay property tax, zero property tax, right? So now they're going to increase the band to 12,000, so quite a lot. So let's say in 2024 you have $10,000 annual value, you actually now paying 4%, right? Which is $400 property tax you are paying, right? But come year 2025, because the 10,000 will now fall under the 0 to 12,000, which is the property tax at 0%, then you don't need to pay property tax, right? So come 2025, most of us should be paying lesser lah, if you fall in the extended band. So then the next band, 8,000 to 30,000 have now stretched from 12,000 to 40,000, right? So there's a $10,000 stretch lah. Oh, so and then it goes down the line, right? Goes down the line. So the last, I mean the lowest one, I mean the bottom, they have increased it from 100,000 to 140,000. So there's a big jump of 40,000, right? In terms of the annual value band. So it will help a lot of owner they're currently occupying their own residential property to pay lesser tax lah. I mean, 2024 we all pay a lot of tax because of the annual value adjustment. Quite a lot. I don't think the government actually anticipated it, because I think a few weeks ago when they announced the increase in the property tax collection, um, it's about a few hundred million more, If I don't, if my memory don't fail me, I think they estimated, correct me, I may be wrong, if I can recall, we're supposed to collect $300 million more, but I think we collected 600 million, something like that. So there's a big collection there. Because of the annual value in 2024 that was adjusted upwards. So now they have stretched the band, increase it. So hopefully we all pay lesser property tax come next year, right? Right. So this my simple calculation, just to illustrate to you, uh, if you are in a HDB flat, if your annual value is 10,000, currently, like I mentioned earlier, you probably pay $80. But come next year, you pay zero. Just now I mentioned to you it's zero. And then for those who stay in the suburban condominium, that is outside town, you pay lesser, about $160. Right? This is an estimate only. Right? So those in a condominium in the central area, you pay $360 lesser. All right, so this some illustration for you to see, just so that you have a feel of how much lesser property tax you are paying, right? Come 2025. But this year no choice, we all suffer, right? We pay more. Okay, for those who are senior citizen, 65 and above, owner occupied, you can stretch your property tax payment from 12 months to 24. Some help some help your cash flow, but the tax you pay is still the same, right? No change. It's just that you allow you to pay over 24 months. It will not impact you so much, right? But you can see the accessible income for the individual is very low, $34,000. You know, so don't know how many, but they probably think 65 and above are probably not working, or have lower income, right? So that's why I think the accessible income is set very low. So this is the gyro scheme for some senior citizens 65 and above. Okay, I've come to the end of the session. If you have any question, you can raise any question. Okay, I think there's one question on the property tax. Not property, the income tax grant, right? I think it's a $2,000. Let me go back to that slide. Whether I can go back to the slide. Oops. Yeah, so the cash payout is $2,000. Oh, $2,000. You will get this. Like I say lah. But whatever the case, this $2,000, like I mentioned, will be already used for your will be used towards the payment of the tax in terms of the tax rebate, right? So you will be impacted by this in terms of the $2,000. So you will get $2,000. Like I say, you don't pay tax, you get $2,000. It's just that when you pay tax, this $2,000 will be used towards offsetting part of the tax, and will be included into the tax rebate Oh, yeah. So this is how it works So a bit like I say complicated to understand. I myself had to really look at it again and again to understand it Yeah. Okay, so this 2,000, I think one of the question asked is this $2,000 considered other income It's not lah, because it will go straight into, if you do, if you're talking about in terms of accounting, when you receive this $2,000, uh, if you have, let's say example, you don't have to pay tax, right? So you're a loss-making company. When you receive this $2,000 in terms of accounting, how do you classify it? Right. So when it comes to accounting, you will have to, because you come in the money come to the bank, right? So you record it, because and then there's no tax to offset. So definitely it will appear in your other income lah. All right. So it will appear in your other income when you receive it. Okay, but the next question that comes from this is, when you put it as other income, will it be taxable in the following year, right? Right? Because income might appear in your income. I'm not too sure, because IRAS have not really clarified whether this cash grant will be subject to tax or not. But because if you know, in terms of cash grant, the tax treatment varies. But if you recall in the past, the PIC cash grant is not taxable. I think in some cases of the COVID-19 subsidy or cash grant are not, but some are, some of the grants are. So this one had to be clarified with IRAS first. Eventually, whether this $2,000 cash grant which are not offsetted against your tax payable. So for those receiving the cash grant can offset against tax payable, no issue, right? Because it's offset against the tax. It's for those loss-making company, they don't pay tax, but they receive this $2,000. So this will go into the other income, right? So come next year, when it come to do the tax com, this $2,000, is it taxable? At this moment, don't know yet lah. Don't know yet. We have to wait for IRAS to give further clarification. Mm. All right. Okay. Any other question? You can type it into the Q&A thing if you don't want to voice it. Okay, for the overseas donation thing, that one like I mentioned, unlike local donation to the IPC, uh, is 250,000. For the overseas donation is 100% deduction only. And like they also going to make very strict that this cash donation to overseas organization have to go through a local register charitable entity lah. So far, they have not released detail in terms of who will administer it, but I think they will probably choose some very big charity like Red Cross, right? I mean, Red Cross do a lot of overseas kind of support, disaster support. So probably, I guess lah, they have not announced anything. So probably they only choose those big charitable organization to administer it. So I can only, so far offhand, I can think is Red Cross. Red Cross probably may be one of those appointed. So only when you make the donation through Red Cross to an overseas charitable organization, then you can get the deduction of the 100%. Again, there's not much detail at this moment. We'll have to wait for it. Wait for IRAS to provide more details as to what sort of local entity that you can donate and then qualify for the 100% donation kind of deduction. Okay, so while we are give you some time to think about question. Okay, beside the tax part of it, like I mentioned, if you are our client, most likely we will assist you in terms of the deduction, the computation, but not forgetting this skill future enterprise support that we have. There's a lot of things in there. I just want to go back to those slides. So beside tax that we are looking at, don't forget that you can still enjoy a lot of grant and subsidy from the government in terms of digitization, marketing, branding. Please get in touch with us. Valerie's emails is in the slide. Later we also make the slide available to you, so that you can then approach us. We can help you in terms of marketing, rebranding, apply the EDG grant, the PSG grant in terms of digitization, you want to go online, to do some of the stuff. All right. Okay, the cash grant like I mentioned earlier is $2,000. If so, especially if you are not making money, no, you're making losses, so straight away you get a $2,000. Oh, yeah. Okay, for those who have done some renovation work in 2023, uh, your year assessment will be YA 2024 lah. Right. So wherever just now I mentioned those enhancement will not apply to those in YA 2024. Right. They will not apply to those in YA 2024. You probably come under the existing section 14N renovation deduction. The only difference, the big difference is under the current scheme, under the current treatment in terms of renovation deduction, is that currently we cannot deduct designer fee, we cannot deduct professional fee like engineer fees. So this cannot deduct currently, but it can be deduct in the future. So those work done in 2023 will not qualify, unfortunately. Yeah, because it's going to happen only in YA 2025. YA 2025, that means things happening this year, 2024. So you do renovation this year, good, you can deduct designer fee, you can deduct professional fees. Oh. So unfortunate, some of you will not benefit it because it's done in 2025. Oh, sorry. I missed out the question. Okay, I think what happened is that so if you do it in 2023, but because your financial year end is March 2024, yes, then you will come under the new tax treatment because this tax treatment is based on year of assessment, right? Year assessment is 2025. So if your year end is March 2024, then your year assessment is 2025. Then yes, you can qualify under this enhancement lah. Oh, so yes. So sometimes year end play a part where your year ends, yeah. Okay, the question about a $2,000. Okay, for this when you are filling up the Form C or Form CS, there's no need for you to indicate the cash grant or cash rebates. You need to work up until up to the chargeable income after partial tax exemption. All right, IRS will work out the rest. So don't need to input the cash grant or the cash rebate. Definitely, however, for when we present to our client in terms of tax computation, we can show it lah. We can show it. But when it comes to filling up the Form C, Form CS, you only do up to the chargeable income part. Right? No need to go beyond that. That means the rebates and the cash grant are not required to be submitted to IRAS in the Form C or Form CS lah. For your own um, uh, presentation in terms of tax computation, you can show in the tax computation. Yeah. Okay. Any more question? Maybe one last question before we end the session. Thanks for all your question. Very interesting question. Okay, if no more question, then I would like to thank everyone for attending this session. Like I said, this is not the end. If you have any further question on the presentation, they come to us. For tax, you can come to us. And for any of the enterprise, skill future enterprise kind of scheme, the EDG, PCG, in terms of the various marketing, rebranding things that you want to do, digitization, enhancement of your human resource system, please come to us. Can get in touch with Valerie. We can then assist you to make use of this grant. Like I mentioned, they extended another year to June 2025, so don't miss it out. Please take advantage of it and get on board lah. Huh? Okay, if not, thank you everyone. Again, happy new year to you. For those who want to buy Toto, tomorrow is the draw. Okay, 12 million. Hope everybody have a luck. Thank you very much. Thanks.